live also in Singapore. Hello, Sir Dan. Hello, and good day to you.
Good day.
All right. So, by the way, Sir Dan has been with us for quite some time, and we met personally in Singapore, and with the WeCapeX Expo in not in Singapore. Sorry, it's on Hong Kong. Hong Kong last year. We met there with the Wiki Expo event, and that's why Sir Dan is here with us today because of there are so many things that happen. Correct, Sir Dan? There's so many things that happen in the market, especially in the US. And
Yes.
right now, one of the uh, is it controversial? Can we say controversial?
Well, I won't say it's controversial because we have been here before. We have seen this movie many times before.
Oh, really? So we can just say it that this is just like a movie happening once again. So
Yep.
anyway, by the way, Sir Dan, for those who just for the first time they watch this program that we have, the Rich Dad PH Money Talks. How many years have you been into the trading industry?
Well, if you want to be very specific, it's 38 years and let
38
me say
years.
38 years and how many months? I would think this is 3 months.
38 years and 3 months as an accidental trader, correct? Because you told me before you became an accidental trader because you don't have plans actually to become a trader, right?
Well,
It
that's true.
just
That's a long, long time back. If you buy my book, you will be able to read my story, which is can be a quite interesting story for those who are intending to join this industry.
yeah, all right, all right. And of course, like what I said earlier, the our topic today is very controversial because it is about the US government with their debt ceiling. So, do you have any background, Sir Dan, about what this story is all about, the debt ceiling story right now in the US? Can you give us
Which
a
is
little
very
bit?
now this topic can only happen in the United States. It's very unique and is
Mm.
peculiar to the United States because there's no government in the world that impose a limit on their borrowing. Only the U.S. government imposed a
Ah,
limit
really?
on their borrowing. So it's very, very unique to the United States.
Ah, I see. I thought we also have that one in the Philippines.
We don't. Yeah, I don't think you have the same thing.
How
Not the
about in
same.
Singapore? You don't have any debt ceiling in
No,
Singapore?
we don't have a hard ceiling. So every time you want to spend, you have to put in the budget, and of course, Parliament will debate about it, and finally they approve it, and then you go ahead and borrow. The thing is that in the United
Mm.
States, it's very, very different because they actually put a limit, a cap on how much they can borrow on any 1 year. So if you reach the limit, you want to borrow some more, you will have to go back to Congress to ask for a lifting of the ceiling. Okay, so this is an
Mm.
artificial ceiling.
Artificial ceiling.
Yes.
Because now, what we're looking at right now is the debt ceiling in the US, in which, based on these figures, it is $31.4 trillion dollars already.
Yep.
And for the last, since 2006, okay, so that's about how many years? Um, Less than 20 years. And their debt went up from 8.184 trillion, now 31.4. So more than 20 uh, trillion dollars for the last 20. That means they increased their debt ceiling 1 trillion per year. It seems like
Well,
that.
they are very spendthrift. You can see that succeeding governments has been spending like a drunken sailor. So you can
Mm.
see that if I have a saying, if your outgo is more than your income, it will lead to your downfall. So this is exactly what we are seeing.
That means they are spending more. Is that what you mean? US.
Obviously, they are obviously spending beyond their means, and this this is a artificial ceiling which has been reached at the beginning of this year. So now they cannot borrow anymore, and because this year tax collection is also lower than expected, so they will have to borrow even more. And President Biden has many favorite programs that he wants to push, and
Mm.
that requires a lot of spending. And without the ability to borrow, they cannot spend. So this is where we are right now.
I just wonder, sir, because I check on the news. It seems that President Biden still have to talk with the Republicans just to approve the debt ceiling.
Yeah, because when this debt ceiling thing goes back all the way to World War I. In the
Ah.
days when the world had its first World War I, in order to allow the government to have access to borrowing, Congress actually allows the government to borrow beyond their tax collection. No, normally what happens is that when the government want to spend, they will have income, right?
Mm.
They will have income from where? Income from taxation, tax collection, right?
Mm,
And
correct.
excess duties. So that will form the bulk of the income for any government anywhere in the world, except for oil producing countries, which, they have so much money from the export of oil, they don't really need to borrow. So
Mm.
any government will first tap on their tax collection. When that is insufficient to support their budget, they will borrow. So, but in order to do that, they also want to make sure that the government do not go on a crazy spending spree like what we are seeing right now. So what
Mm.
it did in the early days is that the U.S. Congress actually imposed a limit as to how much each government can borrow within their financial year. So this limit is basically to ensure there is some kind of fiscal discipline. Okay, obviously, if you
Mm.
don't, because the U.S. has been spending like what you say, in 2006 it was 8.1 trillion dollars. Now it's 31.4 trillion.
Mm.
So that idea was good, was very noble, but in real practices you can see it does not limit the US government from spending beyond what they collect in terms of taxes.
So this is just something like superficial.
Oh, well, you can say that. Like I said, no government in the world will impose a limit to a government's ability to borrow.
Mm.
Even if they have, they will have to debate about it, but there's no hard ceiling. But in the United States, there is a hard ceiling. So there are times they will talk about, maybe let's do away with this nonsense about a debt ceiling. Okay. So maybe at some point in time, the US will come to a census and say, look, it does not serve any purpose except creating more anxiety among investors as to whether the US can borrow money to finance their budget.
Okay. By the way, sir, based on this data that we have here, it shows that, for example, in 2021 of December 16, the U.S. lawmakers voted to raise debt limit. So that means they've been raising their debt limit for quite, often. Is it correct?
It is true. Now, see, the US Congress consists of two chambers, okay?
The
On the
lower
one hand,
house.
you have the Senate, the US
Mm,
Senate, and the
mm.
other one is the
The
House of
Congress.
Representatives. Back in 2021, the Democrats were in control of both chambers of Congress. So when they want to raise the limit, they could easily do it because they have majority. But this time it's
Mm,
different. This time, now remember last November when they have a midterm election, so the Democratic Party actually wrestled back control of the
mm,
House of Representatives. So right now,
mm,
the U.S. Congress consists of opposition on one side of each side of the chamber. So
mm.
whenever they want to pass any law, okay, including the debt ceiling limit, when they come to negotiation, they will have to agree. Previously, they don't have to because, like I said, Democrats used to enjoy absolute majority in both chamber of Congress. So
Mm.
whatever law they want to pass, they will get it passed. Okay, but this time they can't because the Republican Party is saying
Won
that
the
if
Senate.
you want, yeah, if you want to raise the limit, let's negotiate. Okay, and right now we are
Mm.
stuck at a negotiation.
That is why right now Biden is in negotiation with the Republicans because that's what happened. I
Yep.
see, I see, I see. Okay, but by the way, sir, I have here some list of questions. Perhaps we could start discussing this one. My
Mm.
first question will be about how does the U.S. government finance their spending? Because like when we're talking about this 31.4 trillion that they have, so and now they are again wanted to increase their debt ceiling. So how this US government finance their spending?
Earlier on, I did mention governments around the world, except for oil-producing nations, which
Mm,
do not sometimes even collect taxes from the citizen, so they don't depend on those normal revenue sources. Okay,
mm,
most government, okay, will need to collect taxes from individuals, from corporations, and all these taxes that they collect, from both the corporation and their own citizens form the bulk of the revenue, for any government. So beyond this amount, if the budget has a shortfall because the tax collection cannot
mm.
fulfill everything that they want in the budget, then of course they will have to go out to borrow. How does government borrow? That will be the question.
Because we all know, sir, that they are printing, the US government is printing money, sir, right?
Well, that is another part, okay? Because you see, when we talk about the debt ceiling, they want to borrow. How do they borrow? That will be the key question. There's a mechanism in which they need to. There's a law, that says that the U.S. Treasury, which is, for most of us, we understand it as the finance ministry. The finance
Mm,
ministry wants to borrow money because the government said, I need this budget. You go and find me the money. So we'll tell the finance minister, go and find the money. Okay. So in the United States, that
mm.
department, the treasury is actually the Ministry of Finance. Okay. So
Mm.
the Ministry of Finance cannot create their own money. They
I
cannot
see,
print
I
money.
see. Because I really
Okay.
thought that they'll just have to print money so that
They
they
can,
have the money to
but
spend.
not the US Treasury. So the US
Ah.
Treasury will have to create a instrument, and this instrument is what we understand as IOU. I want to sell you. I want to sell you this paper, saying that I want to borrow money from you. Okay, and I'll pay you X amount of interest. Okay, like any kind of IOU. So it's issued by the U.S. Treasury, and they want to sell this paper so that they can raise the money. So that's
Is
how they end up borrowing.
yeah, is this what they say the US treasuries? Is that are you talking about
Yes,
the US
correct.
treasuries?
Yep.
Because
It
because
is
that is actually
essentially
my next question. What are US treasuries?
okay. U.S. Treasury has many names, but we all understand it as treasuries. So by the word treasuries, you can understand that who issue it is the U.S. Department of the Treasury. Okay, so
Ah.
this treasury is in effect, earlier on I did mention IOU.
Mm. So it's just a piece of paper. Uy, wala. Nawala ko internet.
Term notes like 10 years bonds, okay, or even 30 years bonds. So there are many duration along this entire curve, and each of them will carry different yield. Mean to say that how much the US government is prepared to pay, okay, to sell this particular paper, okay, we call it securities. So you understand treasuries is equal to government bonds, is equal to securities. Okay, so when you read newspapers or hear
Mm.
people talk about US treasuries, they are referring to the same thing. Okay, government bonds, securities, and treasuries.
Sir, by the way, sir, once we say US treasurers, these are just piece of paper, right? Just a piece of
Yes,
paper, which is issued by the treasuries
yes,
in a form of bonds, right?
yeah, yeah, correct.
So once we say treasuries, it's just a government bond, not nothing else, just government bond. Because I
Yeah,
haven't
government
seen I
bonds.
haven't
Yes,
seen a real one before, so that's why.
you won't be able to see because the smallest denomination is in $10 million. So you will not be able to see it. But you can go and Google images of a treasury bonds.
And who are buying this treasury, sir? Who are
Okay,
buying?
this is where the interesting part comes. Okay, because the U.S. Treasuries cannot print money.
Mm-hmm.
Okay, so what they do is that when they issue these bonds, it goes into an auction.
Mm-hmm.
So who can participate in the US? There's this thing called a primary dealers. Primary dealers are basically banks,
Mm.
okay, and some of them the big one. Okay, we have Will Fargo's, for example, HSBC. We have Nomura, for example. There are a long list of banks that act as primary dealers. These are the ones that can
Mm.
actually bid for this in any particular auction. Okay, so the bid can be a competitive bid, can be a non-competitive bid. Okay, so whoever's win, okay, will get the allocation.
Okay,
So
okay.
it's the
Let, let,
bank
let
that
me
buy from the treasury.
let me digest that one, sir. There's no broker, correct?
Not at this level. So at the wholesale level, the treasuries do not deal with the individual. The treasuries deal with the primary dealers. So this is the
Ah,
first layer.
that's why you said there's a bidding taking
Yes,
place.
correct. The whoever wants to buy will bid. Even individuals can bid, but those are for very, very small denomination. Okay. Technically, you can actually go to the treasury website and bid for as low as $100. Okay, worth of whatever that has been offered for auction. Okay, so
Hmm.
technically you can, but at this level, we are talking about a wholesale level. Wholesale level consists of primary dealers who, after they buy, will resell it into the secondary market, just like the used car market. You have you
Hmm.
have the dealers of the distributors for a
Primary.
particular brand, okay, and then when they get the right to distribute a car, and then they set up show houses, okay, and then people can go into the market to buy. And after they buy, there is a used car market, for example, people can
Hmm.
buy and sell. Okay, so this is exactly how it works. We have the banks that act as primary dealers. They buy directly from the treasuries, and then once they bought it, they can resell it to anybody who's interested. And who are these people who wants to buy? It can consist of pension funds. It can consist of insurance companies. It can consist of individuals. It can
Hmm.
consist of even the Federal Reserve and other central banks, okay, and other foreign entities. So these are the traditional buyer of U.S. Treasuries.
Sir, let me have a follow-up question on that. What you say primary bank, sir, on the first bidding, only one will win, correct? For
No,
example,
no, 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 no. You will get your allocation, especially
ah,
if you put in, especially when you put in a bid that is non-competitive. Let me say you competitive means whoever offer the best price gets it. Okay, but there are
mm,
also another category you can actually join the auction in a non-competitive bid. Whatever that
mm,
is decided the price, you will get your allocation based on
ah,
what you
ah,
do.
ah, ah,
Okay,
ah, okay, okay. Something like you can get a certain percent of the pie.
yeah.
I see, I see. Okay, sir. With that, sir, because now we already know that who will buy the treasuries, and then you said that there are this level two in which these wholesalers will be selling to most likely retail banks perhaps, and somebody else, corporations maybe, who wants to buy and sell these treasuries
Mm.
at the same time, in which these treasuries, sir, would last like 10-year bond, sir, correct? These are 10-year bond? Not
Not
not not
necessarily.
exactly. Ah,
Not necessarily. Earlier on, I did mention that there are many durations. As short term as 30 days, these are called bills, treasury bills.
treasury bills,
Then the medium term notes are the 10 years, for example, 10 years note.
10-year
Then we
note.
have the long term 30 years bond.
There is also 30 years.
Yeah. So this is the longest. Okay.
So there are also countries, sir, who are would like to invest in the US in a form of
Yeah,
these
yeah,
treasuries.
correct,
There are also
correct.
countries.
Yeah, especially if the yield is very, very good. Right now, the yield is super good. Okay. If let's say I have a lot of US dollars because of my trading with the United States. Okay. I want to lock in. If the yield right now is say 5%, because the Fed fund rate right now is 5.25%. Okay, so the
Mm.
bond prices, the yield will have to reflect the higher interest rates. So I think, okay, if I can get this yield, I want to lock in for the next 30 years. Can I do that? Yes. And then I buy the long end of the bond, which is a 30 years bond. Now, in the period when the interest rate was very low, the short end of the bond market practically had very little yield. So most people will buy the long dated bonds to get at least a higher yield. So technically in any markets, the longer the date for the bond maturity, the higher the yield will be. Okay. But
Mm.
lately we have seen the yield is inverted. What they mean by
Sometimes short
yield
term is
inverted.
better
So it means that the short-term bills are earning higher interest rates compared
compared
to
to long
the
term.
30 years. Okay. And why is it so? Because people have no confidence about the future.
Ah, I see, I see. Because with regards to that, sir, I would like to connect with the role. What is the role of the Fed in terms of U.S. Treasury issued bonds? Because you mentioned earlier that there is the current Federal Reserve funds rate is now at 5.25%.
Yeah.
So, what's the connection with the Fed and the US Treasury bonds?
Yeah. Earlier on, you remember I mentioned the treasuries cannot print money. So somebody
Mm,
have to create the money, okay? And that
mm,
role falls on the Federal Reserve, which is the central banks. So the Federal Reserve will create the money, okay, to at least support the liquidity. You see, the primary dealers, they will buy from the treasuries, the allotment, okay? So if the Federal Reserve wants to uh, add liquidity into the market, what the Federal Reserve will do is to pump cash into the market by buying the bonds from the banks. Okay, they
mm,
create the money, they go to the bank and say, I want to buy your bonds. Obviously, they will pay the banks slightly better yield, so the banks have the incentive to sell it to the to the Federal Reserve. In this way, the Federal Reserve pump liquidity into the marketplace, especially if they want to stimulate the economy. More cash means the banks can go out and make more loans. Okay, so this is how the Federal Reserve comes in to pump liquidity into the marketplace. Now we can see the interest rate, inflation is so high, right? So the Federal
mm.
Reserve wants to drain liquidity. So now what they do is they do the exact reverse, what we call the reverse repo, in which they will sell bonds previously bought from the bank back to the banks, okay, and say, look, now I want to drain liquidities. I will sell you the bonds that I previously bought from you, and the bank will have to give cash to the Federal Reserve. In this case, they drain the economy. So in this case, they control inflation, because when you have too much liquidity, we have inflation. And the theory goes like this: if you have less liquidity, inflation will come down. So this is how the Federal Reserve fits into the bond structure. The treasuries issue, the Federal Reserve create the necessary money so that they can use the buying and selling of this treasury through the banking system,
Mm.
okay, to actually add or take liquidity out from the marketplace.
Sir, if I will ask you, sir, how do you, uh, because it seems that you just discuss a certain flow
Yes.
within the financial system. What do you call that system flow, sir? Because I want to see it. What about that diagram? Because I am checking here on the other side of my computer.
You go and check, go and Google what correct repo. Repo is repurchase agreement and reverse repo.
Repo,
Repo
Fed,
is spelled as
Fed
REPO.
repo. Are we talking about the Fed repo?
Yes, 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 yes.
Okay. Because I have okay.
It's
I just found here. Repo flows. I think yeah. I think this is this one. Repo flow. I think
uh,
let me check this one so at least we can see. Um.
Yeah, this is the one. Okay, how does the repo market works and why it does matter? This is the way the
This
Federal
one.
Reserve okay,
Mm.
create the money,
Mm.
okay, in the system so that they can actually do this. You can see the word reverse repo, which is the exact opposite of a repo. Okay,
Mm. So this is the flow.
this is the flow, correct. So when you
So
see securities, you see the arrow here says securities. It
mm.
refers to the treasuries, which also means government bonds.
So it seems that the right side here is the Fed, correct?
The right side here is just is the mechanism in which this thing flows. Okay, so the Fed is not featured here, but this is how the circulation goes. Okay,
And the dealers is the bank, correct? The
the
dealers.
dealers are the bank. Yeah, correct.
And for example, the dealers or the bank, they give cash to the prime services clients, which is it mentions here as hedge funds.
Yeah, yeah, yeah. These are people who needs the liquidity, who don't need. Okay, every single day, there will be financial institution, whether they are banks or hedge funds. Sometimes they have more money than they need. Okay, you see, money never really sleeps. So, for example, now it's Sunday. Just
Mm.
because it is Sunday doesn't mean the bank will let the money sit in the bank over the weekend for no interest. The bank are
Mm.
always moving the money around. So over the weekend, for example, they have excess liquidity. Okay,
Mm.
after catering for the reserve ratio, okay, the excess they want to park it somewhere else. Most of the time, they will park it with the Federal Reserve, or they lend it to their fellow banks or other institutions that want to borrow because they have a cash shortfall. So these are very, very short-term financing. Basically, it's 24 hours. Every day we have
Really?
this. This is happening in the background.
Oh, so there are also business going on the weekend with banks that
Oh yeah,
can
yeah, yeah.
only,
Money never
like
sleeps.
24 hours only they could earn the interest
Yeah. Even though the interest can be very, very small, but the money earns something instead of sitting in the bank earning nothing.
because it's volume, maybe how many millions, and
Oh, big
with just
in the
percent,
hundreds of billions.
and just sit there for just 24 hours, at least it will earn like a certain point something percent, but
Yeah.
at least
It can
it's
be
earning.
0.00001. It doesn't matter, but at least it earns something.
And how these banks are using it, like for example, how they need it, it's weekend, how I
For example,
cannot
Bank A got excess fund. Okay.
mm,
And they say, okay, I got access. I don't want to let it sitting in my bulk. Bank B said, I need to borrow short term. I will repay you tomorrow. Okay. So Bank B will go to Bank A and borrow whatever they want to borrow. Bank A will charge Bank B X amount of interest with the condition that tomorrow Bank B will sell back whatever they borrow back to Bank A. Okay. And for the privilege of using that fund for overnight, Bank B is prepared to pay an interest on that borrowing. Of course, this can only work if Bank A trusts that by tomorrow Bank B can pay back. Okay. If
mm,
Bank B cannot pay back, obviously this thing will not work. Okay. So there'll be times in which the banks do want to lend to each other. And that's where the Federal Reserve will come in and say, look, if you got excess fund, lend it to me. Okay.
mm.
So the Federal Reserve will be the last resort if this normal flow cannot work for some reasons. And we have seen those happen before in recent times, okay, in which the market
Mm.
is so fearful of each other, they don't trust each other. Because if the fund are leaving for 24 hours, tomorrow you go bust, I'm dead. Okay.
Okay, right. I have here another one, sir, and this is about the. This is coming from WSJ, and it is the anatomy of a repo.
Ah, it's the same.
So
It's
it's
the
the
same.
same.
It's the same.
Okay, okay. So on the left side, it shows a hedge fund. Then on the right side, it shows the money market. So this means these are the users of the fund of the
Yeah.
money.
Like I said, everybody needs money 24 hours a day. Some institution will be short of money, some will be have more than they need. Okay, so among themselves they will do this what we call it's like the grease in your car that is happening so often that you don't think that it is there, but it is the backbone of the banking system.
Because like for example, like maybe a corporation is needing a money, a loan from the bank,
Mm.
and like for example, the company will approach the bank and then they will say, I need like 100 million because I have a project to fund and I need it today. So, oh, we don't have enough cash. Okay, let's call bank A if they have surplus. And if they have surplus, okay, we need it today. Can you send it to me? And tomorrow we will pay. Something like that scenario, sir.
Yeah, it is,
Ah,
and it's
okay.
happening every day.
Every day. That we don't know. Correct? Because
Uh,
it's not in the news, correct? It's not in the
yeah.
news.
We don't talk about it until the system has a stress. For example, there are blood circulating within your body, but we don't
Mm,
think about the blood circulating in your body because it's happening every day. Okay,
mm,
so it's the same for the bank. It's something that is happening in the banking system. We don't think too much about it
mm,
until, for example, something wrong with the system and bank A refused to lend to bank B, and they refuse to lend to bank C, they refuse to lend to bank D, and then that is a problem for the Federal Reserve. So that's where the Federal Reserve will come in and either pump liquidity or take away liquidity.
So how can we connect this one, sir? What is happening right now in the Treasury, Fed, the US bonds? How can we connect this one, sir, to the debt ceiling? Like that's why
In a nutshell, the treasuries create the bonds. The Federal Reserve create the money
the money,
and
the
the
printed
condition.
money.
Yeah, the money and the condition to actually allow all these players here that you see in this diagram to participate in buying the bonds.
Okay. So it seems that the Treasury, because the Treasury needs money for the government, for them, because it is the Treasury that will provide the money for the government, right?
No. They provide the instrument.
Just
They
the
don't
instrument.
they don't create the money. They by law they cannot create money.
So they just create the instrument for
Yeah, for the Federal Reserve to create the money.
the money. So
Okay.
so right now, sir, that the Fed has the money already. So
Yeah.
they have the money already. This money printed by the Federal Reserve, it will be given to the government, correct?
Through the buying through the buying of bonds by the people who
By
wants to
these
buy bonds.
people who wants to buy
Yeah.
bonds.
Yeah.
So
Correct.
meaning to say, it is not the so meaning to say it's not the Federal Reserve who creates money, it's the banks.
No, because for every $1 that's put into the bank do not have to keep the $1. The bank only have to keep, let's say, 10%, 10 cents to the dollar. 90 cents can be used for loans for to do whatever commercial activity. So this is how money.
Fractional reserve, yeah, right?
Yeah, correct. This is the fractional banking system that allows every dollar being created to be multiplied many times over. And when the Federal Reserve create the money, and this money goes into the banking system, by allowing people to buy and sell these bonds that this Treasury create, it can actually enable people to have the ability to buy. For example, today the U.S. Treasury say, I want to borrow $10 trillion. And all the primary dealers add together say, oh, $10 trillion is beyond my ability to buy.
Mm.
So what happened? The Federal Reserve will create the $10 trillion and give it to the bank, okay, in the form of a repo like this, okay, so that they can take the cash and go and buy from the Treasury.
I see. So it seems that
The Federal Reserve create the money, the bank borrows those money and use the money that they borrow from the Federal Reserve to go and buy the treasuries. And then they resell it to the public or to any entities that want to buy.
so so the bank owes something from the Federal Reserve, correct?
Yeah. Now remember, not too long ago, interest rate was zero. So when the U.S. Treasury want to issue bonds, okay, to finance the budget, okay, the Federal Reserve will create the amount of money that is sufficient for the banks to actually buy these treasuries from these bonds from the treasuries. So When interest rate is low, the bank will say, okay, I take the money. It's free money because interest rate is zero. Okay, so they take the almost free money from the Federal Reserve and go and buy from the Treasury, and then what they do, they turn around and sell it to the public. Okay, with a markup. So it's a very cozy relationship. You cannot lose money. It is sure to make money.
And right now that the interest rate is 5.25, money is not easy because it has interest.
Yeah. Now banks are very have tightened their lending standards. That means to say whenever they want to lend money to another entity or individual, they are very, very, they will have to scrutinize your credit score. Means that they don't loan out as easily as before, okay? Because the banks themselves are stressed because in the days when interest rate was zero, they have nowhere else to invest. So they invest in the long end of the bonds. You see, earlier on, I did mention some of the traditional buyer of US bonds are the pension funds and the insurance companies. Pension fund, for example, they are only mandated to only invest in safe instruments. Now, the US government bonds is considered to be a AAA investment, very, very safe because the US government will back up, okay, these bonds. Okay, so unless the US government defaults, okay, it is almost a sure thing that you will get your money when the bond matures. Okay, so this
Correct.
is how pension funds we got it shepherd to buy US treasuries.
It's
And now
safer for them to invest on treasuries.
technically, but now pension funds are all dying because imagine just 2 years back when interest rate was zero, pension funds are forced, okay, are forced to buy US treasuries. Interest rate was low. So those bonds that they bought are very low yield. Okay. So now interest rate has gone up, meaning whatever they have bought previously now are losing money if they sell now. Okay.
Because of the
Which is
interest.
which is the case as what we are seeing in Silicon Valley Bank, Signature Bank, and lately First Republic. They all have the same problem. And in total, there are about 700 over banks, okay, in the United States that have the same problem as Silicon Valley
Silicon
Bank
Valley Bank,
and
SVB.
First Republic because they bought those bonds when the yield was
Still
very,
zero.
very
Very low
very, very low. So now,
interest rate.
if depositors say, I want my money back, they
They
will have
cannot
no choice
repay. They cannot repay.
but to sell this bond. When they sell this bond, they take a loss. Now, technically, this is not an issue if nobody goes to the bank, or at least not everybody goes to the bank and say, I want my money back now. Okay. So if the bank can hold this so-called securities all the way to maturity, they will get the money back plus their interest.
The
Okay.
interest.
Yeah, but now the problem
Unfortunately,
is everybody wants the money back. They have no all the
because
money
they
is
don't have
invested.
confidence because the depositors doesn't have confidence anymore, correct?
Yeah, correct. So this is another issue. This is going to create beyond the debt ceiling an ongoing banking crisis. You see,
Okay.
yeah,
Yes, sir. Yes, sir. Please continue, sir. Please continue, sir.
yeah. So we saw the banking crisis started in March,
Mm.
and it is still evolving. This month we have the collapse of First Republic, and there are other banks on the wings that are probably going to die. We heard about Western Alliance Bank, what we call Westpac. You know, Western Pacific is going to die soon. Okay, so we
So
have other
more
banks.
banks are still coming to die.
Yeah,
About to die. More banks to follow.
more than 700 banks.
Oh my goodness. So are we just saying here that America is being screwed right now because of their interest rate
I
increase?
think we are all screwed because when America gets into trouble, we all get into trouble as well.
Oh my goodness. That's a very, very bad news. You know what, sir?
But that could be good because when things happen like this, market move. Okay, as trader, we don't really care because we can buy, we can sell.
Correct.
So it's actually all good because if you can connect the dot, okay, as to what is really happening, then you can position yourself to take advantage of this because you and I, we cannot stop this from happening. Okay.
Correct.
But we can take advantage if you understand how the whole structure is all about.
Correct. Sir. No, but sir, going back, sir. we have already discussed how the Federal Reserve printed money. You said that the Treasury created these bonds, and these banks are buying this in wholesale. So now, because we're talking about debt ceiling, how this money will go to the government? How
Well,
this money will go to the
when
government
the treasury sells the bonds, they collect the money.
from these banks who bought these
Yeah,
bonds,
correct. Yeah,
which
correct.
is this money was coming from the Federal Reserve, printed by the Federal Reserve.
Correct.
So it's just a channel, sir. The bank is just a channel. It's just like
So
a
you can
third party.
understand it as the right hand, the treasuries wants to borrow money. The
Mhm.
left hand, which is the Federal Reserve, create the money to allow these treasuries to be able to sell whatever they want to sell. So the
Mm.
right hand borrows, the right hand lends. Okay, right hand borrows, the left hand lends. Yeah.
So that's why, sir, once the treasury will receive the money already, then it goes to the government.
Of course.
Okay, okay. So it seems that uh, the treasury is really the one giving money directly to the perhaps it has to go first to the finance, right? For the
Yeah,
finance,
because the treasury is the finance ministry.
the finance ministry of the US.
Yeah.
Okay. So basically, sir, what is the debt ceiling, sir? How it
Okay.
started, how it became uh because right now this created a problem in the US about the debt ceiling. So how they started with the debt ceiling, sir? Because like what you have said, sir, there's no debt ceiling before, and now there is a
No, we have to go back in history. Okay, at the start of
mm,
World War I, okay, before the U.S. Got into the war, and to get the government to enable the governments to actually finance the war during World War I,
mm,
okay, they would have to create the condition for the government to be able to borrow. Because previously it's a very simple government. Whatever you can raise in taxes, that will be the budget that you can work with. That's your
mm,
income.
mm,
Okay?
mm,
And now, when you go into an extraordinary situation like a war, the government will need more than what they collect from the public. Okay, so they need to
mm,
borrow. So in those days, the Congress actually says, okay, I allow the U.S. government to borrow. Okay, on the condition there is a cap. So this cap is an artificial limit which has survived through the years.
mm,
So this has become a semi-annual kind of fight in which we have seen this movie many times, because every time they need to borrow beyond the limit, they will have to go back to Congress to get approval. It will be easy if one party, because in the United States have a two-party political system. Either the Democrats are in control, or the Republicans are in control. Right
mm,
now, the presidency is the Democrats. The Congress, which make up of the House of Representatives
mm,
and the U.S. Senate. The Senate right now is controlled by the Democrat, but the House of Representatives is controlled by the Republican. So whenever the Biden President Biden wants to increase the budget, and they will have to go and get approval from the Congress. Right now, the
mm,
Congress is divided into two parties. They must negotiate. President Biden said, I want to get this ceiling approved, okay,
mm,
increase. I do not want any condition, okay. Republicans say that is not doable, okay. I can increase the budget, I can increase the ceiling for you with a trade-off, okay. That means that you must cut your spending somewhere else. Okay, so
mm.
both sides are stuck right now because Biden said he will not negotiate with any condition.
With any condition.
Okay, Republicans say I can agree to you to raise the limit, but on condition that you must cut some spending. Biden said no cut. So this is where we are right now. We have 2 more weeks to go before we actually hit the wall. Okay, so the market will be very, very nervous.
That's after a week from now.
2 weeks from now.
2 weeks from now. All right. But
Okay.
anyway,
So
sir.
the debt ceiling is all said and that an artificial administrative limit on how much the US government can borrow. Now they
So
have hit the limit.
so going back, sir, to the previous history, sir, what happened, sir, on those previous debt ceiling, sir, resolutions? What
Well, this is
they
not the first time. This is not the first time that they hit a debt ceiling. Okay,
correct?
throughout the history, throughout 1960, as far as I can remember,
Because
the
here, sir,
U.S.
I have here chart, sir. It shows that they have their debt ceiling before 2000.
or more than that, you can go back to 1960. If
Na
you
even
got a
on the
chart
okay,
going back to
okay.
1960, they have hit the limit 78 times.
For the last
Well,
for the last
for the last 70
100
years.
years,
No, for the last what? Yeah,
almost 100
1960 to
years.
1920, we have what? 40, 60 years. For the last 60 years, okay, they have actually hit this limit 78 times.
Something like hitting the resistance.
It's like your credit card, you max out, you hit a limit, you cannot borrow. So you go back to the bank, can you increase my limit? Okay, it's the same thing.
Same thing. Yeah, yeah, correct for the credit card.
Okay.
Correct, correct. So what they did, sir, before? What's their resolution, sir, in terms
Okay,
of
normally they will negotiate. If one party control both chamber of Congress, is easy because they have majority. They will pass through a bill and it will be voted in, okay, and it will be passed. So the government will be able to raise the ceiling without much of a negotiation. Right now, we have one party in control of one half of the Congress. So in a situation like this, it has happened before, okay, whereby both parties must come to a negotiated settlement. Okay, it's a horse trading. You want this, you got to trade off something with me. Okay, so yeah, back in the days when President Biden was the vice president during the Obama administration, we also had the same thing. Okay, in which Obama actually agreed to trade off with the Republican, okay, to get the debt ceiling raised. But at that time, there was also a gap in which it didn't come in time, okay, whereby there was a shutdown in government. We need to say that the money had run out before they could raise the ceiling. Have they defaulted? No, they have not defaulted, okay, but they could not get the debt ceiling raised after they run out of money. So what happened when they hit a situation like this? What we will hear is a shutdown. A shutdown means the government cannot spend anymore. Yeah, the government cannot borrow anymore. So they will have to, like, okay, if you are a federal employee, okay, you were asked to go on leave, no pay, okay, or you can go on leave, no need to come to work, okay, until the debt ceiling is approved, the budget is approved, then you come back to work, then I pay you, okay. So who are government employees? Postal workers, hospital workers, okay, people in essential services. Some of them will be retained, but most of them will be asked to go on holiday, stay home, don't come to work, okay. So these are what we call non-essential workers that are in the government payroll. So you can see that soldiers may not get paid, okay, because the police may not get paid. So these are the situation. The roads will not be clean. The refuge collector will not be collecting rubbish because they are all under government payroll. So these are called shutdown.
I see, because the government cannot pay them anymore.
Yeah, correct. Because they cannot borrow anymore. So they will suspend certain services.
So now let us connect this one, sir, in terms of the US government, sir. So what will happen to the US government if and only if they will default in paying their debt?
Like I said earlier on, when they have hit the limit and they couldn't get the debt ceiling raised in time, the government will shut down. Okay, so during the period of shutdown, they have not defaulted yet. They are still paying the interest on the bonds that are due. Okay, just that they are stopping certain non-essential services.
I thought I thought they totally. So that is
No.
the effect.
So
Okay,
let's say, for
okay.
example, for the sake of argument, come June the 1st,
Mm-mm.
they cannot borrow anymore. So the first thing will happen before they default is that they will shut down the government. Okay, they'll tell the non-essential workers don't come to work. Okay, there's this period. Sometimes it can be as little as maybe a week. Sometimes it can be as much as 3 weeks. So there are history before during the Clinton administration back in 1995. Okay, there was
Mm.
a situation like this in which the government shut down for 21 days. During the Obama administration, when Biden was the vice president, the government shut down for 16 days. Okay, but during those days, the government is still functioning only without the non-essential services, but they still have not defaulted yet. Okay, and the
Mm-mm.
latest we can see is during the Trump administration, there was even a longer period of shutdown. Their shutdown lasted for a month, more than a month, for 35 days. Okay, but the government did not default. They are still paying interest on those bonds that are due. Okay, so now right now we could get into a situation when come June the 1st, they
Mm.
the government will go into a shutdown. It's just like low bat, but your phone is still functioning, but
Sir,
low battery.
right now, sir, I have here, actually, this is coming from Wikipedia.
Yep.
It says here that list of federal shutdowns. I think this is
Yeah.
related to what you said.
Yep.
Way back 1995, during that time of Clinton, like what you have said,
Yep.
uh, twice during the time of President Clinton, they have shut down twice. November of
Yep.
1995 and also with 1996, like
Yep.
21
21 days.
days of
21
shutdown
days.
in which uh, 284 employees with a cost of 400 million. So this means that the government saved 400 million dollars because
Well,
they
it's not exactly safe. When the government say you're still in my payroll, but you don't have to come to work. Okay. But once the
ah
government get their debt ceiling raised, they got the budget, then they will pay them, even though they
ah
need to come to work.
okay, okay. Is it full paid or
Who pay?
full pay?
Mm.
My goodness, no. I did not actually, sir. This is my first time to see this kind. Yeah, because this is very unusual, because normally if we talk about forex trading, you just simply, for a typical forex trader, and also for especially those who are newbies, normally the topics that we are discussing right now, this newbies doesn't care. What is more important to them is the chart is moving,
Mm.
they have their fund and they can trade, correct? But
Yeah.
this what we're talking right now is basically the macroeconomics, right, sir?
Yes, yes, yes. Now
And
trading can be very simple. You look at a chart, this this moving average, cut this moving average, you buy or you sell. But it can be as complicated as understanding the mechanisms, you know. So if you really want to dive in, these are the mechanisms that we don't talk about every day. For a trader, they just know that technical, this is a signal, I buy, I sell. So every day is about
correct,
buying where, selling where, and that's it. They think that is trading. Okay, but to be a real trader, you need to know all the things that's happening behind the scene. So
correct, sir.
you can understand what is really happening.
Because like for example, sir, if you know what's happening in the background, like what you have said, you could just simply say that dollar is weak in the next like 6 months, in the next 1 year. You could say like that.
It does give you the conviction to hold on to a position. If you know that the banks are all underwater, for example, we mentioned 700 over banks are going to be underwater. So
Mm-hmm.
you let us look back last month or the month before. What happened during the period when the banks failed? Where did the dollar go? Did it go up? Did it come down? And now you say, oh, there are 700 more banks going to have the same problem. What happened 2 months ago when the first incident happened during SBV bank
Mm.
collapse? What happened again? So you can see that, okay, if this thing really happened, if another few more banks fail, then we are seeing a continuation of what we have already seen 2 months ago. So what happened 2 months ago is going to stay the same way, and it's going to stay longer. So that gives you the conviction to hold on to a good position. Let's say, for example, you're on the right side of the market and the market is in your favor. And if you do not know the fundamental behind the story, then it's okay, I take enough profit, I'll get out. And then as the market continues to move in the same direction, if only you did not get out, then say, yeah, if only I held on to the position. Or the other way is that if you do not understand the fundamental, you hold on to a losing trade, hoping that the market will come back to you.
Will reverse, correct.
You may not want to hold on because it is a losing proposition.
Correct,
because the fundamentals are pointing in one direction.
And it's a long term. So
Yep.
So if you are in the bad situation and you don't know, you're still holding on, you'll keep on losing money.
Yeah, correct.
You're draining your account.
Yeah. So understanding the driver behind it and how the things are functioning, okay, you got to be a lot more curious than telling people that you are a trader and you buy and sell. That's the end of the story. It's just not that simple. Okay, you really want to know the background
behind why these things are happening. Because, like, for example, sir, what we're talking about right now is with regards to the debt ceiling. Chances are we might as well think what will happen or how the market will react. Like, for example, in the stock market, or for example, what would be the effects of Nasdaq or S&P 500 or on some other index? What will happen to them if these things happens right now? So
okay, now the question is, up to today, the US has never defaulted. Has never, not once.
Ever since, for the last 78 times touching the debt ceiling, the government never default. So
never default. Okay. So why are people talking about a default? Because they sense that this time is different.
Oh my God. So I want to know that why you are saying that.
Will the government default come June the 1st? If you base on history, the answer is no. Because
based on the history. Based on the history.
US has never defaulted. So you base on that and say, no, there's no chance. The risks are too high. Eventually, they're all going to come together and agree on something, and they will raise the debt limit. Okay? So the thing is, as the date gets closer, we only have 2 more weeks before we get to June the 1st. Okay, as the date gets closer and there's no resolution on this issue, the market will be very jumpy. Okay? So when the market is uncertain, what will you do as a trader? You play safe. What you do? If you are long equity, you want to get out of equity. Okay, if you are long bond, you want to get out of bonds. Because if for whatever reason the US come to the date June the 1st and they could not agree, the risk of a default increases many folds. So what will happen if they truly default? This market is going to cradle. Okay, it's not just going to fall, it's just going to collapse. Okay, so as investors, you want to play safe. So in the days leading to the X date, okay, the X date right now is defined as June the 1st, but we do not know exactly when the date is when the US Treasury practically run out of the very creative accounting they are doing. Okay.
So how come you say, sir, that this time is different, sir? Why it's different?
This time is different because we don't have inflation. Previously, there was no inflation that is so sticky. Previously, the US economy looks very strong, okay? So we don't have a situation in which US economic activity is obviously declining, okay? We can see over the last 3 quarters, Q3 of 2022, GDP is at 3.2%, very good. Then Q4 of 2022 is at 2.6%. Q1 this year is at 1.1%. So 3.2, 2.6, 1.1. From the GDP readout, you can see that it is shrinking. Negative 0.1 and double what the federal target rate is at 2%. So inflation is still a problem. And then you have economic growth that is beginning to slide. So what we are probably facing is not necessarily just a lower economic growth. We are looking at a possibility of a deflation. Deflation means we still have very high prices, but lower economic activity. So this is a bad combination. So market will price in this manner. Looking at all the data that have come in so far, we will have to decide whether the risk of default is going to be high. Right now, Biden has said no condition. I want my debt ceiling increase. Okay.
Mm-hmm.
The Republican, which is the head of the House of Representatives, is a guy called Kevin McCarthy. This guy is the leader of the
Republicans.
the House of Representatives. Yes, you can say that he's the current leader of the Republican. Now he is coming from a very weak hand, because when they won back the House of Representatives, okay, they will have to elect a new House Speaker. Previous House Speaker was a Democrat, a person called Nancy Pelosi.
Correct.
So because
Pelosi.
they lost that chamber, so she has to step down. Another new Speaker of the House must come in. Okay, depending on who win that, which party win the election, right? So right now it's the and in order to secure the role of a Speaker of the House within the Republican Party, okay, this guy Kevin McCarthy has to he's faced with a very small group of Republicans that don't vote for him.
Most likely doesn't follow him, his leadership.
There are about 10 Republicans say, you want me to vote for you to be the Speaker of the House, you must not agree to lift the debt ceiling unless you get some government commitment to cut spending. So they say, if you agree with President Biden to raise the debt ceiling with no spending cut, we will vote you out of the House. So you can see Kevin McCarthy comes from a very weak hand. He cannot agree, he cannot negotiate with President Biden on the raise of the debt ceiling with no cuts. And Biden said no cuts. Okay, but Republican Kevin McCarthy hands are tight. He cannot go in and say, I can agree with you. I cannot agree with you, because if he agrees, he will be kicked out of the party. He'll be kicked out of the House of Representatives.
So he is in a very tight situation, sir.
Yeah, correct. So this time is different. On one hand, Biden say, I won't agree to any cut. On the other hand, the guy cannot negotiate with his hand tight and ask him to go and fight. Okay, so he is in a very delicate position. So can they reach an agreement? Based on what we have seen so far, unlikely. Okay,
unlikely.
They're supposed to they met once on Tuesday. They're supposed to meet again on Friday, and last minute they postponed the meeting. That means again they cannot agree. And in the press conference, Kevin McCarthy actually said that the Biden administration does not want to negotiate. He rather default than negotiate. So you can see this is very
my goodness,
very serious language that he used.
So with that, sir, now, because you said it will possibly not negotiate, there will be no negotiation in these two parties. Now, looking ahead, sir, if the US government will default, how the market will react, sir?
Okay, depend on which market you're talking about. All markets will react. Okay, we talk about equity markets.
Okay, equity first, yes.
The first knee-jerk reaction is to sell.
That's why you mentioned earlier that it's better close your long positions, correct?
Yeah, because if this become a reality, US say by default, the first thing the market will do, the stock market is going to crash. Okay,
they're going to crash.
But it will recover, and not only recover, it will surge. Okay, the immediate reaction is to go down. Okay, the bond market, obviously, because this is all about government bonds. You default means you cannot pay.
You cannot pay anymore. Yes, correct.
Okay, so the bond market will crash. Okay, when the bond market crash, stock market crash.
Okay,
investors, at least initial reaction, this is what they do, right? But when they look at the bond market, they say this bond market is dead because government has defaulted. Okay, it will continue to go down. So what will these people in the bond market do?
Yeah, what, sir?
They may take a hit. Okay, then after that, because you see, investors are investors, they need to invest. The money cannot be sitting in the account doing nothing. Okay, when the stock market do come down together with the bond market, at some point they will decide that the equity market is a better place. Because when we talk about risk on, risk off, risk on means people are more willing to take
Aggressive.
risk.
Aggressive.
Yeah. Risk off means people are less confident. They don't want to take risk. So they go to the bond market. Now the bond market has collapsed because the US government defaults. Then theoretically, if the safe haven assets goes down, they will have to park the money in the risky assets. So what I'm saying is that stock market may initially drop and then it will recover very sharply because there is no alternative.
So
Bond
when
market
you
is dead.
say
I have to put back the money in the equity market.
when you say sharply, sir, are we talking about days, number of days, or
Yeah,
just a day,
it could happen in hours. It could happen in over a few days.
or a week?
Yeah, it could be. So the only thing we do not know is the duration of the sell-off. Okay, but it will come to a point whereby if the sell-off is too sharp, okay, then there'll be good bargains. Okay,
It
because
will be cheap. It will be
certain
cheap.
companies are doing well. Okay, and there's no reason why you should sell everything. Okay, certain companies are still relatively well, whether the government defaults or not. So at some point, some sense will return back to the market, and they will realize the equity market may be the better place to be in. Okay, so as the bond market collapse, people can go back in and bottom pick the bottom for equity markets, and they may cause a surge in equity prices. Now, this is just equity markets and the bond market. Now, what about the currency markets?
The forex market.
The dollar is going to plunge. Okay, because you can just imagine, buyer of bonds. Who are these buyers? Other than the pension fund, the insurance company, the Federal Reserve, these are the people that will not sell. Okay,
They will not
but
sell. They will not sell.
the foreign investor will look at it and say, "Oh no, I better sell." Okay, when I sell the U.S. bonds, I have no use for the dollar. I better sell the dollar as well. I want to bring the money back to my shop.
My country. Oh,
Okay, so the dollar will go down together with the bond markets. Okay, so what will happen to the other currency? They will rise, not because they are stronger, but because right now the
because the
U.S.
US dollar will collapse.
Yeah, because the US dollar is collapsing. So I do not want to hold on to a decaying assets. At least that's a knee-jerk reaction. Okay. Then what will happen to precious metals?
Yeah, like gold, silver.
They will go through the roof. Okay. So when you have no faith in dollar and you look around, where can I put my money? Gold market. So you put your money in gold and silver. So different markets will react very differently in the event of a default. So what happens if the reverse is true? What happened until the very last minute they come to an agreement? All these scenario that I painted you will be reversed.
Correct,
Bond
correct.
market is going to fly, stock market is going to fly, dollar is going to fly, gold market is going to come down. So
If they will agree. If they will agree.
Yeah. So you're going to build a scenario. What if they default? What if they come to an agreement? So these two are equally viable because we do not know for sure. But based on what is happening right now, a default cannot be ruled out. That's what I'm saying.
So it seems that we just keep on hold. What you're telling right now is just we just keep on hold on our.
Gold is an asset we want to be involved in. Yes, I think it will go to record high again. Okay. So
Okay.
there are great opportunity. What about Bitcoin?
Yeah. That's a good idea to
If
discuss.
the dollar goes down,
Bitcoin
was going to go up. Okay.
again
Forget
if
for the moment whether it is safe or not. It's just going to go up.
again if and only if the government will default.
Yes, correct.
If not, the Bitcoin will go down.
Bitcoin is coming down. Okay, but Bitcoin may find support if the dollar collapse.
Yeah, of course. Yeah. Because as I look at it, sir, Bitcoin will not die. Cryptocurrency will not die.
At least not the major one. The tokens and the main coins may disappear over time, but the big one I think will stay. Like Bitcoin, I think Bitcoin will be around.
Bitcoin, Ethereum, maybe
Yeah,
also Ripple, perhaps Ripple,
yeah, correct.
Light.
These are the one with utility. Yeah, so these are the one that will survive. But the small little one, okay, we're not so sure.
So how about the stable coin, sir? Like for example, USDT, which is normally we're using it in a transaction basis.
Well, when the dollar collapse, there'll be a lot of pressure on stablecoin because how are you going to keep the peg? Okay,
Balancing.
yeah. So there could be demand for. I think stablecoin will also go down together with the dollar. Okay, because there is instability in the market.
And normally, like for example, USDT. The USDT is almost the same with the US dollar, correct, sir?
Yeah, but they have
So
to keep the peg. Okay, they have to keep the dollar peg.
the peg should be
It's
always the
going to be
same.
a lot more difficult to maintain the peg if there's going to be extreme movement in the dollar
Mm.
because they have to constantly buy sell to balance it.
So
Okay.
like for example, sir, in my case, I have quite USDT in my wallet, sir. I think I would rather withdraw it for now and turn it into Philippine peso. Correct, sir?
Well, yeah, you can do that. You can do that because if the dollar goes down, all other currency will rise, including the
Mm.
peso.
Yeah, yeah, because it will be useless, sir, anymore. Like for example, if the US
No, it
dollar
won't
will,
be because eventually they will find a solution. But
yeah,
the
correct.
initial reaction to the market will be quite volatile.
Correct, sir. Correct. And of course, sir, because for us, so our trading is in US dollar. For example, my fund is in US dollar. So I might be affected as well if the dollar will fall because if I will withdraw my profit, it will be in US dollars.
Yeah,
So if
maybe
I will
maybe you
convert it
should
to
withdraw your
Philippine
profit and
peso,
convert to peso first.
yeah, yeah, correct. That's why. That's why I'm saying like that because
Yeah.
while the US dollar is still expensive here in the Philippines, so at least I will enjoy it for now while it's still not dropping.
Yeah, you
Yeah,
can do
correct.
that. That's for sure.
All right. So again, sir, because I think I have asked already the questions here. Um, Any parting words, sir, as a forex trader? Any parting words or any advice who are currently watching us right now?
Okay, I've been thinking about this the whole afternoon.
Mm-hmm.
Financial markets are great wealth transfer mechanism.
Wow, good words.
It takes money from those who do not know what they are doing in the market to those who do what they know in the
Mm.
market. So you can see if you do not know what you're
Wealth
doing,
transfer.
don't come into this market, okay? Because it's a transfer of, if you don't know, I will take your money because I know a bit more than you. So it favors me rather than favors you if you do not understand what is happening. So like I said, it's a very efficient wealth transfer mechanism. So before you come into this market, make sure you get your education.
Correct, correct. Education first. Invest
Yeah.
basically better if you have to invest on your education because right now, sir, there are so many free education basically. You can
Right now,
see it available on YouTube on
well,
you just Google it.
I'm sharing my views of certain market. I'm not always right, but I find that if I got one more voice, okay, to add to the many voices in the market, so
Mm,
maybe it can create a balance. Because what we are hearing from the mainstream media is lopsided, okay?
mm,
So they won't tell you the truth. And if I am a person who is uh, not going to be dependent on the outcome of what I say, then I create a better, what you call it, what you call it, a more balanced view. So you can actually take views that I share and then see
mm.
if you can use it in the marketplace. When what I say, you must also go back to your own chart and say whether it makes sense. And if the two are in line, then the odds are very good.
Correct. Correct, sir. Correct. And we don't have to depend on what we see on the news. Correct, sir?
News is, if you
Like, for example,
understand it,
Bloomberg News.
very
Bloomberg
good.
News,
But if you
Yahoo.
don't understand the news, it becomes noise. Okay, actually you wanted to buy, but after you read the news, maybe I shouldn't buy. And then market actually go up. It's if only I not listen to the news. Okay, so sometimes it's like this. You have to be able to see the signal for what it is. If you got a buy signal and you say I want to buy, but then something else come into the picture and tell you, oh, this expert said, the market is going to collapse. Then of course you say, oh, maybe he's right. He knows more than I do.
So that becomes noise already.
Yeah, and then I didn't buy. The market actually gone up. And it happens all the time. Okay, because if he's a TV personality, he cannot say the truth. Sometimes he will tell you what he wants to say, but most of the time he can't. Okay.
Because there might be a personal motive to have that transfer of wealth.
If today I'm very popular, they invite me on CNBC, okay, and they say, "Oh, Daniel, we are more than happy to invite you on this episode. Can you come and speak about certain things?" And if I say things that are negative, I say stock market is going to collapse tomorrow, and I say, "Oh, Daniel, you shouldn't be saying that because we do not want to create panic." And they may not invite you again. So you can see that certain times you cannot say what you want to say.
Oh, it happened to you, sir?
No, nobody invite me to go on television.
Because they don't want you to tell the truth, maybe.
Even on my webinars, I get people who actually host a webinar and I say certain things and say, oh, Daniel, you shouldn't say that,
Really?
Yeah. I say, it is what it is. If you're not happy with what I say, don't invite me again.
Because sometimes, like for example, the market will crash like that. Then, you're just giving this, what you call this? You just make the people panic because you said like this, like
correct.
that. So
it is. Sometimes it's hard, right? You gotta find a balance.
And that is why, sir, you better, some information, you better keep it to the community so that the community will benefit from it.
You just look at what happened to, what's the guy name? Tucker Carlson. He spoke the truth and he was asked to go.
Tucker Carlson of NBC? I don't know.
No, Fox News.
Fox News, yes. He tell the truth. That's why he's been kicked out.
Yeah. So sometimes you cannot say what you want to say. Okay, you have to toe the line.
Can you give one example, sir, about the truth that he said?
Oh, he said so many things, I mean, he don't talk about the markets, he talk about the geopolitics,
even the media.
Yeah, the media
corruption in the media, yeah.
Obviously, your boss is not going to be happy.
Correct. And I think he's going back right now in the Twitter space.
No, he's on Twitter. Okay, he said he's going to be on Twitter, and
so you are a follower, sir, of Tucker Carlson?
I do watch his news, but I don't like follow. I know who he is, what he represents, and what his thoughts are. Okay.
But at least you are aware on what he is doing, at least.
Yeah.
All right. So anything, sir, you want to add?
No, it's dinner time. Getting ready for dinner.
Yeah, correct. So maybe you still have to prepare some dinner for your family. Anyway.
I'm gonna go.
Okay, sir. So thank you very much once again, sir, and looking forward for our next interview with you. And thank you once again, and looking forward to see you in the next live stream.
Bye-bye.
Okay, sir. Bye-bye.
Ang Fortune Prime Global ay isang group of companies na isa sa leading financial services sa buong mundo. Ang aming headquarters ay located sa Melbourne, Australia. We also have a support office here in Makati, Philippines.
With more than 20 years of market existence, Fortune Prime Global is licensed and regulated by top body regulatory bodies such as Australia Securities and Investment Commission and Vanuatu Financial Services Commission. Ang philosophy namin dito sa Fortune Prime Global ay simple lang. That is to ensure client satisfaction. And in return, we earn clients,
and we strictly adhere to the rules and regulations set forth by the regulatory bodies such as